Markets are focused this morning on cautious comments from Fed Chair Jerome Powell about more rate cuts. Australia's large and growing US trade deficit could spare it from metals tariffs. And Australian consumer confidence in the here and now is at its lowest since September. That's coming up in our 5 Things in 5 Minutes on Wednesday, February the 12th. And then in today's bonus deep dive interview, ANZ Senior Commodities Strategist Daniel Hynes looks into the prospects of gold going through $3,000 an ounce.
We've seen a really sudden surge in volumes being imported into the US to potentially front-run any additional levies that may be applied onto that sector.
But first, in 5 and 5 with ANZ, caution about more rate cuts by Fed Chair Jerome Powell in congressional testimony overnight is dragging on the US dollar and US stocks this morning, while nudging up US bond yields. But markets are mostly solid after US President Donald Trump announced a 25% addition to tariffs on US imports of steel and aluminium. How the announcement will affect Australian producers is currently unknown after the Australian Prime Minister and the US President both suggested Australia's trade deficit with the US could see it receive an exemption. ANZ economist Sophia Angala says the goods trade deficit with the US has historically been large.
In the year to December 2024, Australia's trade deficit with the US totaled $27 billion, which is around $1.3 billion higher than it was in the year to December 2023. The US is Australia's second largest source country for imports, and through the year of 2024, Australia imported around $51 billion of goods from the US, which is over doubled the value of its US exports at around $24 billion over the same period. In FY24, Australia's top 5 imports from the US included goods vehicles like vans or trucks, aircraft, gold, engineering equipment, and pharmaceutical products. This accounts for nearly a quarter of all Australian goods imports from the US.
As of 4 a.m. Sydney-Melbourne time, the US dollar index was down 0.3%, the Aussie dollar was up 0.3% at 62.92 US cents, and the Kiwi was up 0.3% at 56.54 US cents. Number 2, tariff news is being closely watched as traders assess their impact on US inflation. With January CPI data due tonight, the first read since the FOMC held rates last month. ANZ head of G3 Economics, Brian Martin, is expecting monthly CPI inflation of 0.3%, which he says would indicate a disinflationary environment, even as the annual number stalls.
If they come in a lot stronger than expected at, say, 0.4%, I would have thought we'll have all the guidance from FOMC members that it would be appropriate to keep rates on hold, at least during the first half of this year. So I think what they might do is maybe extend pause on interest rates and give sort of clarity around that. But as I say, let's wait and see the numbers. But certainly our framework at the moment is that, although challenging, the disinflation process is still in place.
Number 3, ANZ Roy Morgan Australian consumer confidence dipped 1.8 points last week to 86.7. It's off a 32-week high the week before. Here's Sophia again on the underlying moves.
Looking to the sub-indices, there was a broad-based fall in the week, but nearly all sub-indices remain above the average for the second half of 2024. However, household confidence in their current financial conditions is at its lowest level since late September. But household confidence on the economic outlook and their finances over the coming year are still well above the average that they held over the second half of last year.
Number 4, Sophia says there were some changes in confidence among different housing cohorts.
Looking to the housing cohorts, while confidence for mortgage holders and renters similarly pulled back, confidence for outright homeowners rose slightly. But on a 4-week moving average basis, confidence across the housing cohorts are largely steady from last week, with confidence for outright homeowners still relatively quite above confidence for mortgage holders and renters.
Number 5, Australian business confidence rose 6 points in January to just below its long-run average, according to NAB survey. The rise closed a gap between confidence and business conditions, which fell 4 points. ANZ senior economist Adelaide Timbrell says there was nothing too concerning in the survey, which is the last before the RBA's rate decision next week.
Purchase cost growth actually slowed down compared to previous reading. Labour cost growth picked up a tiny little bit and final product price growth was pretty steady. So there's nothing in here that's going to really change the outlook for the Reserve Bank or for us either.
Adelaide Timbrell there. Now, in today's deep dive interview, ANZ senior commodities strategist Daniel Hynes looks at the prospects of the gold price hitting $3,000 an ounce. Remember, it started last year at just a little over 2,000. Here's Daniel.
Well, at the moment, I think despite some commodity markets probably indicating there's not going to be a huge impact on demand, I think the precious metal sector and gold in particular is certainly worried about what this uncertainty will do. And we're seeing a really strong level of haven or demand for haven assets such as gold as a consequence. But I think it's even broader than that. You know, we're talking about the political uncertainty, the geopolitical risks entangled within all of that as well as really playing to gold's drivers, I suppose. And that has resulted in a huge surge in demand. But certainly US traders in particular are worried about gold getting caught up in this tariff war as well. We've seen a really sudden surge in volumes being imported into the US to potentially front-run any additional levies that may be applied onto that sector, and also premiums for physical metal are really surging. In fact, it's now taking several weeks to access physical metal from the Bank of England's vaults in London, which is one of the main sources of physical metal that the industry uses. And we're also seeing, as I said, those premiums really escalate as the search for physical metal really ramps up. So it's impacting the industry in a lot of different ways, certainly providing a fairly strong level of support to the price itself.
What do you think of the prospects of it going towards 3,000?
Well, we think it'll hit 3,000. That's our short-term forecast in 2025. So, we suspect this is not a sort of a flash in the pan. It's going to be something which hangs around for some time. And I think the market is certainly setting itself up for that being the case. So increasing allocations to such an asset is smart. It'll certainly, as it is at the moment, performing relatively well in these highly uncertain terms. So I think the industry is going to see demand remain fairly strong for the foreseeable future.
Daniel Hynes there. I'm Bernard Hickey. That was 5 and 5 with ANZ for Wednesday, February the 12th. Catch you tomorrow with all the detail on that US inflation data for January tonight and what it could mean for the Federal Reserve's interest rate path. This podcast contains general information only, not investment advice. You should obtain advice for your personal circumstances before making any investment decisions. Please view the podcast disclaimer available via your media player or email.